welcome to the Trading Market Technicals morning call video for Friday, January 11th. And we had a nice big up day yesterday. Just going to run down the numbers. Dow up 80, Nasdaq up 14, S&P up 11. And we did break out of that range that I discussed yesterday morning. That we actually broke out, then we actually pulled, so we did a basic pop and drop, and then we kind of grinded sideways, and then I think the shorts got a little worried and started rallying. Market started rallying, shorts started covering, and so we closed outside of that range above the highs. And a lot of people, a lot of traders saying, wow, you know, this is great, we have a new breakout. Do we buy this new breakout? Well, not just yet. I'm not going to look to go and get my hands full with a bunch of long trades, not just yet. And I'm going to show you why. Again, one day does not make a trend. Definitely impressive. A little bit more volume than the last couple of days, but would have liked to see a lot more volume, and I'll show that to you as well. And you know, we're at 5-year highs, and we're 10% off of the 2007 highs, and that's obviously the accommodation of the Fed, and that's all it is. So we really need to keep that in perspective. However, price is what pays us, so we really need to understand that we can't fight the Fed. And although in theory you might say, well, this is crazy, this can't happen, the markets aren't, yeah, the economy's improving, but at a very slow pace. Doesn't matter. Price is what pays us, and that's what we need to understand. And then we also need to understand, well, where the market is at this point, how much risk do you want to put on? So me personally, again, I'm just looking for the best possible setups I can until we can get something where I believe, and markets are chugging along all in one as a whole. And I mentioned the beginning of the week, I did a longer term perspective, and I said that the market in a technical perspective, in a longer term view, is actually looking really, really quite well. But you can't just, as looking to build longs. Now, if you're long, the longer guys, the long-term investor, that's one thing. But if you're short-term day trader, swing trader, 1 to 3 days, you can't start looking to buy longs here. At least not a great deal of longs. And me, I just I'm looking for the best day trading setups for now before we actually really get active. Now, we did have that 1 to 3 day pullback, right? I mentioned we had a 2-day very shallow, and every day I said, guys, looking real bullish. Really use a lot of caution if you're looking to get short here. And sure enough, we broke out. Now, today's going to be quite interesting, and I'm going to roll that that chart, and I'm going to explain to you why. Because again, one day does not make a trend. However, we want to see the market at least have an inside day, consolidate, and then break out of yesterday's high. And then I could say, you know, for a short-term swing trade with a tight stop, if you think we're going to at least test the highs, then why not? There's not a problem with that at all. As long as you identify your risk and position size yourself to the amount of risk tolerance that you have, then there's no reason to do that. Another thing that's a little disturbing to me, and what I see is, as you know, in these days you need to be a little bit well-rounded trader, and I do a lot of the Forex. I see a lot of these commodity block currencies like the Aussie dollar, New Zealand dollar, the Canadian dollar. They're at extreme overbought. Now, if you don't think that the equity markets follow what the Forex markets do, quite wrong. They're back. Actually, risk on, risk off is the same as the Forex markets as they are as equity. So what we do is I like to keep an eye on what's happening in the Forex markets. I do trade them as well. But we want to me, it's like the rubber band is being stretched on both sides. And I would have loved to see at least a gap fill, or you know, a 3 or 4% pullback the last couple of days that we had that little pullback, but nothing really happened. So what's happening is now these indicators that I'm showing you, going to show you, are getting stretched and getting a little bit more overboard as we speak. And again, not a sell signal unless we have a trigger, but it's just something that I want to bring to mind. All right, so we're going to go. Let's go right into the indicators and then see where we are here. And this is our NYMO. This is a very reliable indicator, and I can't stress this enough. We actually were down into this 30%. We dropped back up to the 48%. Again, getting into overbought territory. That does not mean that we can't move higher. I'd like to see it get right up in this area here. Break above the Bollinger Band. Get up into this 80, 85%. And then I would say, as a trade, even a swing trade, you could put on a couple of shorts. I don't think you can do that now, not yet. There's too much complacency in the markets, and there's no catalyst to bring this market lower. So that means that the trend is higher. The trend is continuing to be higher. So we want to be looking for either relative weakness intraday, again a gap play, an earnings play. If not, then if you're looking to trade the market, you need to be buying pullbacks. All right. Now let's take a look at the. I show this to you quite often. Nasdaq record high percentage index. We are at lofty levels here. Again, that's the only thing that kind of scares me. If we had a nice little pullback and we actually dipped quite nicely in our indicators and we unwound our overbought reading, I'd have no problem taking on a few long trades. But for me, I'm sticking to tight day trading until we get some of these pullbacks and a nice pullback reading. This year, I like to see a higher low. And I mentioned if you look at these prior higher lows, you see what happens usually within like 2 or 3 weeks. This has been going on for about 4 weeks now, but again, doesn't have to repeat itself. So but I just like to continue to look at what's happening, and then we can take it from there. Now take a look at this. This is the S&P 50 above the 50-day moving average. When you get up to these lofty levels, you're going to have some sort of a pullback again. Now we had a 1 to 2 day brief pullback, and this does not have to happen, but again, this is another red flag for me to say use the word of caution for the longer term traders that we should get a little bit of a pullback. And every time we did pull back, look what happened. The market bounced back, and these are right here. Now if you take a look at the S&P 200 day, we again look at these lofty levels, and here's the S&P. When we hit this, we rolled all the way back down, and then we started going all the way back up again. And now we're actually at this level, if not we took out 415 where we were back in September. So again, readings are starting to get overbought, a little bit stretched here, but that does not mean that this is a sell signal. Same thing with the bullish percent S&P. As you can see up here, we're getting to these areas. So that's like the word of caution that I'm using. That doesn't mean intraday you can't get long or get a handful of long trades if you can find them. If you just sit in front of the screen all day, you'll see, a lot of there's really a very quiet. And that's what kind of scares me a little bit, that it's so quiet intraday. When the markets, you come home at the end of the day, you have a regular job, you're like, wow. We must have been killing them. We're up 80 points again. It's just sometimes not like that. All right, so now let's take a look at our complacency. And we had this before in our VIX. VIX is again at the lower bottom. This is another snapshot of the VIX. Bollinger Band still within the band. And I think you're going to need something like this. I think you're going to need a big washout in the VIX, big push lower, break out of the band, and then roll back in again. And this is what you're going to need, something like this. So that's what we'll keep an eye on. CBOE, okay, put call, reading, very bullish. We just broke down again. Now we're bullish again. So the complacency reading is extremely low. No fear at all whatsoever in the markets. And that's what the Fed wants to do. Take a look at copper real quick before we go into the charts. Copper had a nice bullish for a bull flag right into support. Nice big pop yesterday. Exactly what you want to see when the markets are rallying. Take a look at the weekly chart. Now, I know it's Friday, but still want to show you this weekly. We're in this longer-term symmetrical triangle. If this copper does break out in this trend line and we hold for a couple days above the upper trend line, then I think you're going to have, no question, a full-fledged rally up to the highs. Because copper is definitely a leader. They call it Dr. Copper. As you know, it's a big industrial metal. It's used quite widely in industry. So that's something that we're going to be watching. All right, let's go into the charts. 10-day. We had about 6-7 days, of consolidation, really all chop right after the holidays, after the fiscal cliff. And you see what happened. We popped up. We rolled back into our support, right into pivot, actually touched it right to the penny, and then we just started grinding higher. And at the end of the day, I think the shorts were a little bit annoyed that we didn't get that pullback, that we didn't follow through, and they just covered. And that's what happened. Really, it's a short squeeze rally. So this is something that, again, I'm always a leery guy, but I want to make sure that I need to be proven that this is definitely a full-fledged breakout. So we'll see what happens today. It doesn't mean that even if we consolidate, and as long as we stay above this upper trend line, this is going to be bullish, no question about it. And we took out Friday's high, and I'll show you here, as you can see, and we'll go through all of the important sectors. We had this little consolidation, again, which I've been saying this is bullish for that 2-3 day move back, and look what happened here. Nice little volume. I like, but again, our stochastics on the daily chart are overbought, MACDs are overbought, and then we're breaking out again into overbought territory. So something to think about, but look at our inverted head and shoulders, seems to be working out quite nicely here. 151 should be the target, or at least close to it. So again, everything is chugging along right. I just worried about the overbought reading that we have in our indicators and again in our daily charts. But nonetheless, that doesn't mean you can't trade for the day. Here is the S&P 500, and I had the CCI index in here, and I mentioned, back here how strong it was when we had this nice big rally pop. We popped above 100. We stayed there, right, for a few days. Then we broke back down again, and we ended up being into that 50%. And then we actually just stood sideways. And all of a sudden, if you looked, we never really broke back above 100 for quite some time. And then right up in here until we got into this area, this right shoulder of the head and shoulders, we broke up briefly, rolled back down again, broke up briefly, rolled back down again. So we haven't really stood above, like in this area, like we did as we were climbing here. So a little more of a weaker reading. Nonetheless, still bullish. We're up above into these 80, 90, 100 area, and we're into this resistance zone in the S&P 500. So something really to keep an eye on. Again, look at our inverted head and shoulders. So really everything is chugging along. I would just love to see a little bit of a deeper pullback to really give us an unwinding of our overbought readings so we can actually get a little bit more aggressive to the long side. Longer term view of the S&P 60-minute. At our head and shoulders here again, inverted head and shoulders, 115.13 in our reading. We're at 1471. Still got a little bit of move, but I'll tell you, the way the S&P's been moving, that's a 2-day move if you really think about it on any good news. And I mentioned yesterday that we did unwound our overbought reading on our 60-minute chart, if you recall, if you watched the video, and sure enough, that gave us a little more power to get up at these levels. And now we're basically at right up in this 2.25 in the MACD, and we're still not overbought again in our 60. We even haven't quite hit 70, 80 or 90. When you really get into the RSI, 80, anything above 70, 80, 90 is really overbought. But we're still now, we unwound that for a couple of days, so that gave us a little bit more power to move a little higher. 30-minute S&P, as I mentioned, I said, guys, we got a consolidation, energy's building. Let's see what happens here. I think we're going to get a pop to the upside. It doesn't tell you what move, which way it heads, but this one looks like it was moving to the upside. Obviously, we had everything on the markets pointing in that direction. Sure enough, we broke, we popped, and dropped, and then we rallied higher. So it looks like that the trend is continuing to the upside. Our Bollinger Bands broke out. Now, still a little tight up in here, but as you can see, when we got real tight, this is where we popped up here. So, again, a nice little indicator to give us a view. And here, transport's leader of the 5 indices that we follow, chugging along real nicely here. Nothing bad to say about it. Yes, we are overbought again, but it is not a sell signal. So we'll just keep an eye on, see what happens. Maybe we get a little bit of a pullback in here. But the transport's moving real nicely, again, giving us that bullish signal. IWM's crazy bullish if you look at this chart. IWM's here, nice consolidation. We broke out of it again. Now we're at new highs again. Again, risk on small caps. This is exactly what you want to see. Big move up higher. They actually sold off a little bit in the intraday period, but again, held up their gains quite well. So again, everything's kind of chugging along nicely. Same thing with the Dow. Broke out of the range as well. So all of the sectors that we follow broke out of their ranges. We are, looks like, headed for higher. We broke out of that 6-day, 7-day consolidation. And now what we're going to need to see is another 1 to 2 day consolidation, sideways move, at least for today. And then Monday will give a telltale sign if we do break out of yesterday's high. Then on volume, then you could actually look for some small swing trades with some tight stops. I think that would be a little bit easier to digest, to say, okay, we're at these levels, but you know what? We're continuing to go higher. And if there's really no out there, no risk events, which there will be, Bernanke speaking. So that's gonna definitely give us something to watch for. And I think that is going to be a real what the word I'm trying to use is that a real awakening call to say, okay, What is Ben Bernanke looking to do? And he's attending University of Michigan next week, and he's going to be definitely discussing Fed policy. And I think it's going to be something to really seriously, some issues that are going to be opened up on this conversation. So it's something that I'll keep you posted on, and something I'm going to be definitely watching. Okay, Apple. Look at Apple here. If you see this little area, this little, we have a descending triangle, and usually just a matter of time before we start waving in here, and then we break down. Now we have earnings coming out. Again, I mentioned I wouldn't touch it, not here. I'm at the 500 level with a tight stop, if that. But me personally, I'm totally staying away from this thing until earnings and see what happens. I would like to see some sort of a real positive catalyst, and it doesn't bother me buying the stock at 550 when it's at 520, only because that I wanna make sure we're going really in that direction, because there's a lot of hedge funds, and I mentioned in the beginning, at the end of the year when we were up here in this Head and Shoulders when we called it. That stock was a #1 holding of mutual fund, hedge fund, and retail. And when there's only one exit, you have to be careful. And look what happened. So anyway, guys, use caution if you're looking to trade Apple. I look at that as only a day trade. Lastly, same thing. Q's held up quite well. Obviously, it's not just Apple. But a lot of technology stocks did well, and as you can see here, we didn't break out of the Qs, and Apple really helped that because we was sluggish yesterday, but nonetheless, we did move up higher. All right, guys, that's it for today. Have a great weekend. Enjoy the weekend. I'm going to have a real big report on Monday. We're going to go over some weekly charts and monthly charts as well. I think that helped a lot of people as well. I got a lot of emails stating that it was a nice big perspective of an overall view. So we'll keep doing that for Mondays. Have a great weekend, everybody. Be safe, and I'll talk to you on Monday. Take care.